IMF is warning the global economy is growing at its slowest pace since the financial crisis. It's forecasting only 3% growth this year, the least in a decade. The IMF's also trimming its forecast for next year by 0.1%, and that now comes in at 3.4. Trade wars and geopolitical tensions are to blame. Clare Sebastian is in New York. Should we be surprised by this?
No, not really, Richard. Certainly not, having heard the speech from the incoming IMF chief last week, where she warned that this was happening, that the trade war was going to cost the global economy $700 billion into next year, that she put a number on it, which is something that we haven't seen before, and said that there might be need for a coordinated policy response to support this. The IMF is clearly very concerned. I want to pull up, Richard, one of the reasons why they're concerned. It's not just confidence that's dropping, it's trade itself. It looks like global trade this year is stalling in terms of its growth to about a standstill compared to 5.7% year-over-year growth in 2017. This year, expected just 1.1%, and then something of a rebound next year, but not up to the previous levels. So they're extremely concerned. They say, look, we're not there yet. This isn't at a point where we're going to see the global economy tip into recession, but they're warning that if there's a policy misstep, that this could happen. 3% is a precarious situation.
Right, because to those viewers who are wondering, well, 3% sounds quite a lot. One has to balance the fact that that's a combination of OECD, mature economies that grow between 2 and 3. But the faster growing economies, Claire, of which you'll be familiar, that we should be seeing growth of 5, 6 or 7%.
Absolutely. This is, I mean, the IMF continues to say that it's around 2.5% global growth, at which point they start to worry that recessions are starting to hit, Richard. And yes, you know, they are concerned. Economies like China in particular really starting to slow down. They're expecting 5.8% growth from China in 2021. That's down from more than 10% a decade ago, Richard. So clearly a major change going on there. And it's these systemically important economies, China, the US, the Euro area, Japan, that are really proving to be a drag. The lift that we're seeing next year, unlike the slowdown this year, is not broad-based. It's driven by many economies that had seen a sharper slowdown this year and might be rebounding next year, the likes of Venezuela, Argentina, Iran, not by these systemically important economies, Richard, which account for about half of global GDP. So that's why there's concern.